Hey folks, welcome to another edition of Under the Hood, where we take a closer look at the numbers. We always hear that we want our deals to be underwritten conservatively, right? But what does that really mean? Basically, what it means is we're building in some margin for error into our underwriting. So for instance, if market vacancy is 5% in the market on your deal, you'd like to see it underwritten at 10% and make sure that the deal can still stand on its own 2 feet. But today we're going to focus on another lever, a key lever, and that would be the exit cap, also known as the reversion cap or the terminal cap. And again, you just want to make sure that there's some margin for error on the key levers of the deal. And the exit cap is a big one, and it's very sensitive. So we're going to dive in here. I'm going to share my screen. Okay, yes, this is correct. Now, this is an actual deal that we did just at the end of last year. Just want to make note, this is the targeted exit price. And remember, the way you get your targeted exit price is you divide your net operating income, your NOI, by your cap rate, right? So here's the exit cap that we came with on this deal. Now, I happen to remember that the prevailing market cap was 6%. And you can see we're at 7%. That's where we built in our buffer. We built in an entire percentage point higher than the current cap rate. You'll also hear people say 100 basis points higher. But I want to show first how sensitive the value is when you change this parameter. So let's say, what happens if we go with that 6%, the actual prevailing market cap? Huge effect, right? Over $2 million increase in value. And that would be a beautiful thing, right? Upon sale, after we're all holding the deal for cash flow, we're collecting our cash flow. If we've increased the value from the time we bought it, then we're going to all split the profits, right? So the higher the number, the better, obviously. But we don't want to predict that cap rates are going to remain stable or, worse yet, compress. Believe me, I've seen this. We actually want to build in a little buffer upon what is actually there. So let's go back here to our terminal cap rate. Let's just say it's 6.5. Let's say our prevailing cap rate right now is 6.5. All right. Actually, I'm going to do this over for you. It's kind of a rule of thumb. You want to add a 0.1% times the life of the hold. So if this is a 5-year hold, multiply 0.1% times the life of the hold, 5 years. So that's a half percentage point, right? So let's say we're sitting, ignore this terminal cap rate. Let's just say this is our current cap rate. The market is currently yielding 6.5% cap rate, average of all the comps in the area, right? Well, we want to add this to that. And that's what we've done here. So instead of predicting that we're going to remain at the current cap rate of 6.5% and everybody's going to be happy and we're going to make $13.9 million roughly, we're going to build in a little buffer. We're going to add this 0.5% here. This is like the most simple rule of thumb, by the way. There are more complex methods of doing so, but you do want to check with your operator and find out what that prevailing cap rate is. So here we go. We've added in that 0.5%, and we are back down to 12.9 as a targeted exit price. And the beautiful thing is, if cap rates do not rise, and they actually remain the same, that value is going to jump by $1 million. Let's say cap rates even compress 6.0. Again, a $2 million increase by what we're projecting. But we don't want to do that, of course, because the number one rule is to never lose people's money, right? So we remain conservative and we build in a high terminal cap rate so that we preserve investor capital. If I can stop sharing here. I hope that sort of made sense. So you're probably also wondering, those of you that don't know, where can you find out that information? How do I go about finding what a prevailing market cap rate is, so I can, build in that extra 0.5 percentage point or higher or more. In this case, we built in 100 basis points, a full percentage point, right? The prevailing cap rate was 6%, and we put in 7 for our exit cap. But how do you find this information? How do you find out that the prevailing cap rate is 6%? Well, again, first thing you want to do is ask your operator, and then ask them how they came to that conclusion. Another thing you can do is you can go online and you can go to the CBRE cap rate survey and hopefully find your market there. You can compile the data yourself, which would be a bit of work. You'd have to find all the comps. Another way, maybe the most direct approach, not fail-safe, but a pretty good way, is you want to maybe ask a real estate buddy who might have access to a Yardi matrix or a CoStar report, and that will provide you the current market cap rate. So, for those of you who've never gone over this, I hope that wasn't too much. You can always review. If you liked it, definitely, comment below or shoot me an email if you have questions. And I hope you enjoyed this edition of Under the Hood. Thanks for watching.